Hello everyone. This is the pre-market report video for today, May 11th in the Indian stock market in terms of Nifty and Bank Nifty. Last night, before the US market opening, US Bureau of Labor Statistics released the US CPI data. US consumer inflation data for April month on both metrics such as month-on-month basis and year-on-year basis. On month-on-month basis, consumer inflation increased by 0.4% and it was in line with the analyst forecast. But it was higher compared to the last month-on-month basis, which was 0.1%. Again, even on standalone, 0.4% month-on-month basis is not that bad but not so good as well. Then in terms of year-on-year basis, there too the consumer inflation comes as slightly less with the analyst forecast. It's 4.9%. In comparison, analysts expected 5%. And the March month data was sharply lower compared to that of the February month, which was 5% as well. All this partial good, not super duper. This made the Fed rate monitoring tool bets on a Fed pause in June jumped to over 90% from 79% a day earlier. Now, this growing bets on a Fed pause pushed the treasury yield lower, helping the rate-sensitive sectors including tech to rally. Apple, Amazon, Google, all the tech rallied significantly. However, Energy Information Administration released the US crude stockpile, which comes as addition of near 3 million barrels compared to the expectation of negative 1 million barrel. This made the oil to drop over 1% and thus the energy stocks. About numbers, Brent crude oil trading near to $76.5 US per barrel and WTI crude oil trading near to $73 US per barrel. This, along with there was a report released by Bloomberg that UAE Royals believes that American stocks are overpriced and the recession is imminent. Because of that, they are holding a massive short position in American stocks, especially the industrial ones. The results limited in S&P 500 gain and Dow Jones traded negative. At the end, Dow Jones decreased by 0.19%, S&P 500 up by 0.45% and Nasdaq stocks was the one that rallied, increased over 1%. Regarding VIX, it crashed 4% and moved down below 17 from near 18. In terms of Indian areas, because of positive US tech stocks, both Indian IT areas closed marginally positive. Then about banks, HDFC Bank rallied and closed positive of over 3.5%. Reason, here I'm guessing might be two. First one, in the aftermarket hours, SEBI gave the approval to HDFC AMC merger. Second one, also bank released the clarification statement about who will get deposit insurance and so on. While ICICI Bank ADR closed positive, but it's more or less in line with yesterday's market. Regarding SX Nifty, at 3 am Indian Standard Time, it closed at 18,385. So it's indicating 45 to 50 points gap up opening. These were the things that happened in the global market. Now let's see the Indian market related info. Yesterday too, most of the companies that released the quarterly results posted it very good, such as L&T, Dr. Reddy's and Relaxo. I hope you guys remember this. In the last pre-market video, we discussed that an American investment firm Jefferies were overweight on L&T due to the expected high order bank and possible increase of capex cycle to over 15%. Here, now L&T released their quarterly earnings report and in that, their consolidated order book increased to 4 lakh crore rupees. In comparison, last year, it was just 2.3 lakh crore rupees. The order inflow up by 19% year on year, beating the 12 to 15% guidance. This is the first positive. Then the second one, their both revenue and profit beats the expectation, but however, their profit margin contracted. So that's negative. Moving on, Dr. Reddy's posted the 11-fold jump in their profit. So it's a huge positive. So I expect it to move into positive territory. Let's see. The same for Relaxo as well. Now, before summary, I like to inform you guys about the Karnataka exit polls. Just a disclaimer, I'm not in favor of any party. Anyway, this is snip I took from the Money Control website. If required, please pause it and have a look. They listed the various news channels exit poll results and in that only one in favor of ruling BJP and all others were in favor of Congress. Here, if this is true, then I believe it's not good for stock market, but still SGX Nifty took it positive. So let's see how market is reacting to it, since Bangalore is an IT hub which attracts lot of FDI. As a summary, because of the partial good inflation number, tech stock in US market is bullish. So despite being exit poll shows that Congress is winning, SGX Nifty is indicating 50 points gap up opening and HDFC Bank look positive. Then about the things to look out, Asian Paints, Aker Motors, Siemens, Aditya Birla, Care Ratings, Deepak Nitrite and Gillette India are some of the major Indian companies' earnings results are scheduled to release today. And in terms of macro, before the Indian market has, Chinese inflation is due. And finally, in the aftermarket has, in the night, US wholesale inflation data. Here, the expectation is 3.3%. And then usual various US weekly Thursday things. Yesterday, institution-wise, for the 10th consecutive session, FII were net buyers. They net bought shares worth approximately 1,830 crore rupees, while DII net sold shares worth approximately 790 crore rupees. Coming to technical, Nifty had a significant volatility throughout the day due to the initial positive gap up opening. Then that followed the notable sell-off in the first half, and ultimately in the end it recovers fully. And thus on the daily chart, Nifty formed the bullish dragonfly doji pattern, indicating robust buying today in the market. Finally, after making multiple attempts over the past week, Nifty index successfully surpassed the crucial threshold of 18,300. Still, 18,000 to 18,050 is the crucial level since it already formed the base. Now Nifty is trying to uplift the base levels to 18,150 to 18,200, but that can be only confirmed in the next 3-4 days if it sustains there. Now moving above 18,350 can open up possibilities for the market to reach the range of 18,500 to 18,600. The overall trend remains positive, indicating that there is an overall upward bias in the market. So despite potential resistance levels, the market is still expected to move in an upward direction as long as it sustains above 18,200. In terms of Bank Nifty, by combining the last 2 days, Bank Nifty forms the bullish Harami pattern. This is positive since yesterday the price held up by the buyers didn't allow it to fall to the bearish close of day before yesterday. However, like I said in the last pre-market video, like Nifty base level, Bank Nifty go to the resistance level. As in the last 8 trading sessions, it struggled to pass through 43,500 to 43,800. So, till breaking those region, I will be conscious on Bank Nifty. Then regarding open interest analysis, for Nifty from change in open interest, there are some significant call option open interest unwound at between 18,100 to 18,300 and maximum new put option open interest added at 18,300. Still, it's difficult to say anything here. Then in case of overall open interest, there is a huge short straddle present in the 18,300 and followed by some in 18,200. So the maximum put option open interest is present in the 18,200. Thus 18,200 is the support to look out for. Then the next maximum call option is present at 18,500 and followed by 18,400. So 18,400 is the immediate resistance and 18,500 is the strong resistance. Then coming to Bank Nifty, from overall open interest, the next maximum put option open interest is present at 43,000 and in case of call option, the maximum option is present at 43,500. Thus, 43,000 is the immediate support to look out for and 43,500 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm and it will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.